back to the Riggy Report. My name is Riggy and it's been a minute, but we're back in a new location. We've relocated, so now we're back to the videos every single week. So there has been, interesting revelations in the mortgage world. So Rocket Mortgage, who is the nation's biggest non-bank mortgage lender, actually recently announced as of yesterday 1% down mortgages, which is absolutely crazy. And we're just going to talk about it for a little bit. The basics of this program is the buyers are going to go to Rocket Mortgage. They're going to put 1% down, and it's going to be a federally insured loan. So Fannie Mae and Freddie Mac is going to insure the loan. So those are government agencies. And while they put down 1%, Rocket Mortgage is going to cover the other 2%. So usually for like a conventional loan, you need to put 3% down, but Rocket Mortgage is going to put down the other 2% for the buyer. And they're also not going to charge any PMI. So the PMI would be the mortgage insurance that someone has to pay if their mortgage loan to value ratio is less than 20%. So honestly, this sounds like a really, really good deal if you get approved for it. However, let's talk about why Rocket Mortgage would want to do something like this, because paying down 2% of your down payment seems like a really good deal, right? However, they're doing this because business has mostly dried up for them. They're really trying to squeeze out, as much as they can out of, buyers in the market, because no one is really buying right now. They're also trying to compete with Bank of America. If you guys remember last year, Bank of America introduced a 0 down mortgage. So you don't have to put anything down. So they just cover the full loan. You just have to show up and hopefully have your papers together. Couple of reasons why Rocket Mortgage is doing this. As of right now, interest rates for mortgages has hit about 7%, and prices are still sky high. So it is actually incredibly expensive for regular people to be able to afford a home right now, especially if they have to put a 3% down. They're trying to make it a little bit more cheap for people to buy mortgages, and they're trying to entice people back into the market. So to qualify for this loan, you have to be purchasing a single family house or a manufactured house. So that would be like a mobile home. And you have to be making less than 80% of the median income within that area. So this is a home loan geared towards pretty much low income individuals and low income families. So, that they say that this loan will be good for about 90 million people in the US. And while that does sound like a great idea to try to get low income people into homes, realistically right now, the way the market is looking, finding homes that fit that, price range is going to be really, really difficult. However, this program is really appealing to first-time home buyers because it's going to really take away a lot of the down payment requirements, which is a significant barrier of entry for people. Because right now, with the way rents are going, with the way inflation is going, having to save up for a down payment for a house is really expensive. And a lot of people don't have family to gift them the money to buy a house. Now this program, from just the looks of it, does sound like a good program, and it does sound like a good opportunity. But with everything, you have to read the fine print, and you also have to look at if this makes sense for you to do. So right now, interest rates are at 7%. So it's going to be a relatively expensive loan. So you have to look at, if you're considering this program, is this a house that I'm going to be able to afford the monthly payment and everything like that. So let me know what you guys think down below. Welcome back to my channel. I'm going to be recording and uploading more frequently since we are in a new space. I just have to get things figured out. And thank you for watching. I will see you guys on the next one.